The Hedgeless Horseman here. It's October 28th, 2022. This will be my second video of today. Hopefully it will be a bit shorter. I just wanted to go through an example portfolio. This is a HODL portfolio I manage for a family member. It doesn't show all the holdings, but just to give you an idea, it's like, again, how I think. First of all, typically what I've said, a HODL stock is, or hands-off stocks. Like, you don't really need to care too much about timing, etc. It's a very low maintenance approach, and although if you're active and very good at it, you probably will have even better returns. But still, I think you can handily beat this market without being very active at all. Just having sound investing theory and pick the best risk reward cases, etc., and have more importantly a long-term perspective. These are some of the top holdings, for example, and just to explain why I think it's a HODL-worthy stock. And again, this is just, I would be pretty much happy to not do if I didn't do a single trade in this portfolio. I still think that would handily beat the GDXJ and the overall markets, in the next 2-3 years, etc. And that's the whole point of it, basically, that I don't need to do much because it's very time consuming to be active across X amount of portfolios and keep everything in mind at any given time. So far it's gone pretty well anyway. So first of all, Snowline Gold, like I said, you already see some people complaining that it's off the all-time highs, which is going to happen in every stock almost weekly, if you know what I mean. An exploration store is going to have a lot of all-time highs, and they will have a lot of corrections along the way. My thinking for Snowline Gold is that they might be sitting on a true tier 1 discovery, a type of deposit, let's say, at valid, which no other company has. I think that's just a good rule of thumb for a tier 1 deposit or discovery. Does any other junior have something similar? Can you buy a more advanced version of that, etc.? No, you can't really. Given what we know, it looks like it could be very high grade for a reduced intrusion related gold system. It looks like it could be absolutely massive. And then you of course have the immense exploration portfolio. You have insiders with a lot of skin in the game. They have plenty of cash, probably won't need to raise, depending on how aggressive they are. I think they will have around, 25-30 million or something after this field season. Could easily last them another year. So you don't even have the dilution aspect. Even though, I think people's fear of dilution is exaggerated. And that's one reason I think we have these enormous swings at the lows, because there's a bunch of companies that are low on capital, and not Snowline, but a lot of companies are low on capital, and everybody is taught that dilution is like the worst thing ever, so people sell because they know financing is coming up, etc. So that's one reason I think why you're seeing this absolute slaughter in juniors. And in my opinion, I think a lot of juniors are already so cheap that they can, if they diluted by 100%, raise their entire market cap in cash, I still think that would be prove out to be, many of them would have positive expected returns. So I think it's exaggerated, but I'm not the market. The market does what the market does, and that's why I think also that the opportunities get so extreme at lows. Because nobody, if you have that fear, like they're going to raise money, no price is low enough. because you're thinking all the time, well, okay, if it goes lower, they're going to raise even lower, and if it goes lower again, they're going to raise even lower, and the dilution goes up, and yada yada. So these stocks get pushed down way below intrinsic value, especially higher quality ones. And even the companies that don't really need to raise money, they given the sentiment, they get pushed down as well. I guess the main point is that, like always, there will be no. All focus is on risks, imagined or real, right now, and everybody's looking for an excuse to sell. That's how these bottoms work. That's why you see, like this week, a few, some really good drill holes from some companies. Stocks didn't move. If they would have bad news, they would probably go down, even though that's more than priced in already. It doesn't matter. That's how psychology works at bottoms. All focus is on risks. Hence, you're a contrarian if you actually, worry more about the upside than the downside right now. But few are contrarians, obviously. Anyway, going back to Snowline, could grow for years. Could be a tier 1 deposit discovery, I think. I mean, if you look at the monster deposits that's been sold in Canada, that would be Detour Lake and Canadian Malartic in 2014. I think Detour was bought in 2019. I think the price per ounce in those acquisitions were, I think, between $300 and $390 per ounce. Those were operating mines. I think maybe Canadian Malartic was an operating mine. Anyway, so that would be a discount if you actually have, obviously not a fully built mill yet, but just to give a sense, like, monster deposits, I think that they were around 10 to 15 million ounces. And they get acquired at $300 to $390 per ounce. That's around, 3 billion per 10 million ounces. Snowline is at, I think, at 350 million market cap. So I can easily see if this gets acquired, if everything plays out, and it becomes, 10, 20, 30 million ounce deposit value alone, yeah, Snowline is very, I think, underpriced right now. And that's the whole point of it. It's like people always like, yeah, you can't guarantee that or whatever. No, of course you can't guarantee that. It's just if that turns out to be true, you might 10 bag even from these levels in Snowline. And that's from value alone. So maybe it's pricing in a 10% chance of that happening. Yes, I like the risk reward. And if that doesn't happen, people were like, oh, see, didn't, play out that well, or that way. Well, you might have, 10 other companies with similar risk profiles. And in that case, you would only need 1 out of 10 to actually work out in a, close to blue sky scenario. And that would have your portfolio back to neutral from one stock alone. And obviously that means you have to hold it, because you can't have the buying and selling have to match. You can't just have, well, I think that in 2-3 years, Snowline might have an inferred or even indicated resource of like 20 million ounces. And you're sitting here day trading, looking at the price swings in the short term. How does that vision in terms of price, we're talking 3 years, if you're trading that in between, you're mostly trying to trade, then why are you talking about 20 million ounces, etc.? I mean, the whole risk reward is favorable in my opinion, assuming that you kind of just hold all the way through it. You let it blossom. I mean, Great Bear, if you thought, it's probably gonna be 8 million ounces, but I'm up 100%, so I'm selling. You didn't even let the case play out. And you missed the 10 to 20 bag or whatever. So I mean, a huge pipeline of projects, etc. I mean, theoretically, they could be busy drilling Valley and maybe Gracie and Jupiter and I don't know 25 other targets for the next 3 decades. So one of the most obvious, I think, HODL-worthy stories out there. So I don't try to time the tops or the bottoms. If it gets too cheap relative to the long-term vision I have, that's when I typically buy. But I think it's better to, let's say, try to add in dips in these stories than it is to try and time the tops in this story. Because sure, a recent top, for example, I mean, that implies a lower expected return from the top to the end point, even if blue sky hits. But that still might be, I don't know, 600% in that case. So that would not be bad, obviously, but after a dip, maybe that goes up to 1,200%. So it's just more, in my opinion, degrees of bias than, anyone being a clear seller or anything like that. Magna Mining recently did a piece on this. That's my main green tech play. It doesn't have too much copper, but has some copper. And it's also a play on PGMs because I think platinum looks really squeeze worthy. It's highly levered on COMEX. So I think, they have a lot of nickel already. They're about to acquire a project which I expect to close at any day now. Then I think Magna Mining will be absurdly cheap. Absolute world-class management, which are doing pretty much what they did 10 years back, built a small nickel junior in Sudbury into a $1 billion success. They are obviously hoping to replicate that success. So again, if Magna Mining alone works out, I could easily see that become a 10-bagger in the next 2-3 years. If just Snowline and Magna Mining works out, close to blue sky, I think they'll, could pretty much have a good return on the entire portfolio if every other story went to zero. Goliath Resources, a unique story. I haven't seen a ore body like they have. That predictable, high grade, underground, got a bunch of stuff working for it. I think it's around 95 million market cap, perhaps. Fully diluted is probably closer to, 130. And then I just remind myself, okay, Great Bear, high grade ounces, kind of high grade in Canada. I think that got sold for $100 per ounce. So if that's true, then if this turns out to be a takeover target, which I think it will, it's listening to Quinton, he thinks this might be one of the largest underground high grade discoveries in Canada. If that's the case, if we have use Great Bear as a reference, that's 180 million per 1 million ounce. So it's trading below 1 million ounce in a takeover scenario right now, and I think that's going to be way over than 1 million ounces. So I really like the risk reward. Assays will have huge impact. That might quantum leap it. So that's what makes it exciting and intense, and that of course with assays come assay risk. It's just that balance of probabilities given what they've seen visually. I don't think, they're gonna hit something, and I think they will hit in a lot of holes, etc. So the odds of them ending up with something not worthy of development, I think, is low. I think blue sky across their holdings is 10 million ounces or more. That will take years, obviously, but if you compare that, so we're talking blue sky scenario, I don't know, maybe 2-3 billion down the line in a few years, etc. And versus 100 to 130 today. Yeah, I think I like the risk reward very much. And again, if these three work out along the lines I hope, my portfolio might, or that HODL portfolio might actually multi-bag from that alone. I-80 Gold, one of the best risk rewards with a focus on margin of safety. Incredible sunk costs, trading at 500 million or something. Sunk cost probably closer to 2 billion. Expecting to, I think they're aiming to produce 400,000 ounces by 2025 or something. Just incredible. I mean, if I probably should actually have I-80 Gold at an even higher weighting, just based on, I mean, they have so much exploration potential. They have so much infrastructure. They already have 12 million ounces of high-grade gold, 120 million ounces of silver. It's just, I mean, it has the growth, incredible margin of safety, quality of assets, and it's in Nevada, of all places. So I think this is might actually be the best risk reward of any junior I know of. And it's what I think is, the law of large numbers, let's say, because you look at it, it's 530 million market cap, and you look at these juniors with 5 million market cap, and you're thinking well, I don't want to be buy the one that's at 500 million. I want to buy the one that's at 5 million. But the odds of a 5 million market cap actually finding something is extremely small. These guys really already have it, and there probably should be at 2 billion already. But that's how we work, and I get affected by that as well. You just look at the market cap and think well, how much more can this run? But it's that's why I think one reason why it's so extremely undervalued, and that hence why the risk reward is so good. Because I mean, if I-80 Gold would turn out to be worthless or worth less than 500 million over the long run, I mean, I don't even want to think about how worthless the most micro cappers would be. Headwater Gold, it simply turned into a pretty, decent position now after the recent run up. I talked about this when it was down at, 12 cents maybe. I don't remember actually how low it went. Just absurd. I mean, great management team, huge skin in the game. 10 projects or something, 3 are already, proven with the drill bit. Not barn burner discovery holes, but anyway, it's from a micro cap perspective, that was easily one of the best risk reward kind of pre/post discovery plays. Obviously, Newcrest went in there with a 140 million US deal. I mean, it's very liquid. Haven't really done much. They're already financed for $10 million, almost their entire market cap in the next 18 months or so. So not a lot of risk there, I would say. Obviously, they if they find something substantial worthy of Newcrest, they would own, I think, 25% on the projects they partner up with. Still, at the market cap they have, if Newcrest finds something that is Newcrest worthy, we're talking probably at least 500 million in value. 25% of that, still a pretty good number, etc. Loro Resources, just huge deposit. Probably going to be one of the biggest discoveries, or maybe, I mean, it already is probably one of the biggest discoveries, but that could still grow a lot. They just keep expanding that system. Market doesn't care at all right now, and that's okay. I mean, if this keeps on growing at some point, and we're gonna get a resource, I think maybe in Q1 or something, then it will be pretty obvious just how big that is. And if they just keep on drilling more, I think this current market cap is just gonna look increasingly ridiculous. Western Alaska, also like Goliath and Snowline, kind of unique. Have an 8x8 kilometer system or something. They made a discovery at the edge of the system, one of these CRD trends. Insane grades. I mean, that's the thing. And again, you look at Silvercrest, they had like, I don't know, 100 million ounces, traded up to 2 billion in 2020, I think. Now it's valued around 1.2 billion. Obviously a lot more advanced, but it's in Mexico. Their goal is to have, I think, 120 million ounces AG equivalent after next season. So if that's true, they would have an probably very high grade on par with Silvercrest inferred resource after next year. And again, compare that to Silvercrest's valuation and huge insider ownership. I think insiders have like 40 million at risk. So, and again, a huge system. Footprint is huge. I don't know how big this could get, but it's like 1 to 1.2 kilometers or something of this current CRD trend could be enough to have a Silvercrest type deposit. And that could be worth, I think, over, I don't know, $1 billion or something. I think their market cap is like 120, 30. Risk reward should be obvious. Long years of runway for growth. Tectonic Metals, I talked about this after they acquired the Flat Gold project. The market did not care at all. And I, said stuff like, given the size, scale potential of the Flat Gold project, I think that if we go into a higher sentiment environment and they do some work on that one and, everything gets hyped, I think that could easily, six bag without much difficulty from the level it was at. It's up around, 100%. It has doubled or something. Still, I think it's one of the better risk rewards for a micro cap. So I'm sitting put in this. Obviously, we see Crestcat or it was announced that they're doing a private placement again, and Crestcat is leading the placement, and I hope to be participating as well, and that would be my third participation in Tectonic. So it's actually become quite a robust position for myself as well. And again, it's like, what was the edge? I just looked further ahead. Okay, they pick up a project, market doesn't care, it goes even lower, and just thinking they're like, hey, this kind of target is probably gonna be one of those that could get revalued a lot when we go from sentiment low to high. So okay, if I just have to wait for that to happen and expect a relatively low risk, 3, 4, 500% return, count me in. Pacific Ridge is probably one of the more high risk out of these, I would say. Comes down to, yes, there's a bunch of assay results, or there's assay risk. They recently put out a very good hole from their RDP project, which is not even their flagship project, and it's drilled by Antofagasta, and they would have 25% of that. A good hole. I'm assuming Antofagasta is going to continue working that project. A high grade porphyry in BC, that could be worth quite a bit, and 25% of that could be worth quite a bit. They're pricing in, right now I think PEX has a market cap, what is it, 28 maybe. So let's say it's pricing in, 25% of something worth 100 million for RDP. I don't know if that's expensive or not, but the thing is they have Clayule, which is their main flagship project, and we are waiting for all assays there. And I don't know what the assays are gonna be. If they said they hit and extended, they hit both the west and the east zone, and that could expand the system considerably. But the odds of them hitting barn burner holes on their first huge step outs, I don't think that's very high still. The implications might be that, yes, this is very undervalued anyway, and I think they're going to hit some pretty good holes closer to, the center where they have been drilling. So that's a more high risk, high reward one. But when I look compared to the market cap, I like the risk reward there. I mean, if it did turn out to be one of the better high grade porphyry gold copper system in BC, I mean 28 million. If you don't even include RDP, that looks very cheap. Obviously, if it becomes a company making deposit, it's going to be worth a lot more than $28 million. Line 1 Metals, they've raised money. I mean, that's unfortunate for Line 1 that they're pushing towards production, so they have a higher burn rate. And again, it's like how the sector works right now. Everybody hates risk, everybody hates dilution, everybody hates anything that could be negative, and discounted hard. I just think that an alkaline gold system with those grades, and we've seen many stories of up and coming producers not working out. I think I've counted around 8 so far just in the last 12 months or so. That is not a good sign, obviously, but this is I think very high grade. They have obviously, Wally has hired really great people, mine builders, so I think they have a fair shot of actually going into production successfully. They might raise more money though, and that's what I think the market is already pretty much discounting. But you kind of saw the same thing in K92. They raised money, stock went down, and then it went up 1,400% because they did get into production, and then they explored and increased production over the next 2-3 years or something. So from a longer term perspective, I do think, again, alkaline gold system, very high grade. They've hit the feeder zone. That should be increasingly valuable, even though they won't mine that at the start. But I wouldn't be. I'm actually surprised that Line 1 hasn't been acquired already, given that they have, full permit. It's a permitted mine. They're building the mine. They've hit a high grade feeder zone. They got 6 kilometers of the caldera to explore. So there's for sure going to be a much more gold there. I think Line 1 will be acquired one day. SK Mining. That is a tricky one. From a growth perspective, they have an immense amount of targets. They could be drilling for years to come. We're still waiting, I think, for that, slam dunk intercept, let's say. Because what they've hit at TV, they've drilled very good holes last year there, but it's not too different from what Skina has already drilled out. So that is probably right now. That's probably one of the trickiest, because they have 30,000 meters of drilling coming out, and I have no idea what that drilling is going to show. It's kind of enough, I think. If they hit one good hole or something, or a few good holes as some of the new targets, I think the story changes completely. And I think they will have more good results out of TV, because that's where they had the high grade and thick intercepts before. Still, it's very hard to say, because that again is kind of like Goliath. They could do a quantum leap, given that this will be again 30,000 additional meters. It's just that in Goliath's case, I'm more sure there will be a large number of good results, given how predictable the system is. VMS systems are much trickier, and we know that the SK Creek deposit was very narrow and going like a snake, so that wasn't the easiest one either. The bullseye intercept came at hole 140 or something, which kind of says something about how long it can take to really figure out where the mineralization is, if it's more on the narrow and chaotic side. So I don't really know. I don't know the future right now with that. I mean, if they just keep drilling, they for sure are gonna drill up a deposit or 2 or 3. That I know. I just don't know going into these assays exactly what will happen. So I'm more on the like hold and reevaluate than just buy. But I'm prepared if they. Yeah, again, that depends on how these coming assets are. That will change the case a lot. And then I have just listed some mid-type positions. I mean, typically these make up. I haven't checked, but I'm assuming these makes up like 70% of the portfolio, maybe 80%. And again, in my opinion, really any one of these, or if 2 work out along the lines of what I hope, I think that will be enough pretty much to have a good return in the portfolio. But that also again assumes a longer term horizon, because I have no idea what any of these stocks are going to do in the short term. It's just that if I look 3 years ahead, assuming I just held on to these, some I think will be big successes, and especially if we go into next sentiment high, I think these could be 5 to 10 baggers, some of these. But I do not know which, and I don't think they will be 5 to 10 baggers within next month or year. So again, the risk reward and the HODL concept assumes that you hold these longer term growth stories until they have blossomed, let's say. And in the meantime, these can go down 50% and along the way to becoming what they might become, etc. Obviously, hopefully, if I'm, let's say, a bit more active, that nothing has really happened for a story that goes down 40% for whatever reason, I might, shuffle over. So I can, of course, be semi-active and just use the volatility. Anyway, some mid-size like Timberline Resources, they have a Carlin system. It's quite cheap. It's down at $20 million. I mean, look at a pre-discovery or grassroots play close to $10 million. I mean, Timberline looks extremely cheap relative to that. I do think, again, market might be, they're gonna have to raise one of these days, etc. But they have kept on hitting. And I mean, they have a huge land package. They could be drilling for years, and I don't think the current blip is going to matter too much in the long run, because there are simply not many high-grade Carlin systems that are found, and they have one, and it's close to I-80. Novo Resources has given that the price has gone down considerably. The position has gone down as well, because I haven't really I haven't doubled down really lately, even though again I think it's so cheap that I wouldn't mind adding. And given the results from the air core drilling at not at Hemi, but from the Hemi trend, that might surprise. I mean, we know what Hemi is worth. Nothing in terms of success is priced in, given their cash level now. So who knows? Maybe they will find a company maker, and this, I'm not saying that's going to happen, but of course there's a possibility if they find something similar. I mean, Hemi is worth, I don't know, 1.5 billion or something. That's certainly not priced in. So I like the risk reward, although it is high risk, high reward stuff. If you know what I mean. Scotty Resources, they've had very good results. It's kind of a sleeper. Not many people pay attention to it. But they've had very above my expectations actually. Thick high grade intercepts, pretty close to the premier mine, or they called Asgard Resources. So I think that deposit is going to grow. And high grade, thick, pretty long runway for growth still, I think. Nevada King, I'm really starting to, I mean, with the price going down and they have more success at the Atlanta gold mine, I think from a margin of safety perspective, I think Nevada King is becoming one of the better ones out there. Still have their huge land package in the Cortez trend. And the Atlanta gold mine alone appears to be a high-grade, near-surface, open-pitable deposit in Nevada, close to infrastructure, legacy mine. So I don't know how much they need in terms of permits, but it looks like it should be one of the easier mines to permits, I would think. And if they have 1.5 to 2 million ounces of high-grade open pit stuff, I mean, that could be worth a few $100 million at least, I think. So I think that's getting increasingly cheap just based on the Atlanta gold mine. And then you get all the, I don't know how many projects they have for free within the Cortez trend. Newfound gold, quite controversial. Some say it's so narrow, yada yada, but they keep on hitting. I mean, they're drilling like crazy. They keep extending. Now they increase the Keats strike pretty much, and they have a lot of targets. They're simply brute forcing it. I think they have like 14 rigs or something working. I don't know. I'm assuming they actually can drill through the winter. I haven't seen anything in terms of slowing down exploration, at least. I don't remember. It's not the cheapest one out there still at face value, but I mean, given the let's say increasing metal endowment and the declining price, that's starting to look pretty good again, I think. And if that works, given the grades, etc., that could surely be worth a lot of money. And I wouldn't be too surprised if that gets acquired as well one of these days. And I think they have the possibility of they have a very high grade ounces close to surface. The trick is again the somewhat narrow characteristics of some of the veins, etc. So I'm not a mining engineer, obviously, so it's kind of hard for me to say. But they are sure spending a lot of money drilling up more gold. Yeah. It's like just looking at the HODL portfolio so far. This you can probably see is like a lot driven by Snowline. Again, not like, I mean, they are very good results. I mean, GDXJ is down minus 19% over the same 3-year period. So it's, I mean, beating the index by 110%. That's, I mean, kind of absurd, really. I mean, there's no leverage in play or anything like that, and we know that juniors on average are punished. I mean, GDXJ is not down at this level. It's not below the 2015-16 bottom, so I'm very happy with that. But I hope this is, again, an example. I mean, this is a quite low maintenance portfolio. All of these stocks, given everything that's known now, I would be happy to, if I did nothing, I think this will continue to beat the market without doing anything. I'm not saying you should buy all these companies, but I hope, I don't know, give a sense of how you can actually beat this market without needing to be a day trader or trading much at all, really, just having a longer time horizon than the market and not give a crap really about the short-term volatility, because this is for sure volatile still. but it's, as you can see, the trend is at least up. And just touch on kind of letting the winners run, etc. I mean, if you start off with, you bought a small 2% position in Aloro back here, up here it would be an 11% position. Let's see from the top here to where it is 45. So let's say, I mean, at this point in time it's 11% of your portfolio if you didn't sell anything. That's still down 45. So from the top, it's still down less, way less than the average junior from the top. So that's good, and it's had grown to a sizable position. So 11.2% of your portfolio would only be down 46%, whereas average junior might be down 70%. So that's outperformance alone. And again, most people will, some will probably throw shit on Aloro saying, well, it's down, from the top. But yeah, but again, if you look at, how from when you bought in, for example, that's like in the last video, why everybody's just stuck on the recent past and just always highlights the worst, like the guy who's like lambasting newfound gold. I mean, yes, it's down quite a bit from the all-time high, but it's still a multi-bagger from the start. I mean, that's up 200%. So even with a 45% flush, you're still up 200% when GDXJ is, I don't know, down, I don't know how much, 40% perhaps. So I mean, absurd over outperformance, but still there will be people and a lot of holders that are like, I mean, it's still frustrating. But again, growth and time, and letting your, let's say, winners run. Because what has happened for Aloro? I mean, the case has just gotten better and better. So I mean, back here it was, if you had a 2% position, that's very high risk, high reward. Now it's more lower risk, high reward. So again, a lot of these cases, I think, is like if when the case gets better, you shouldn't necessarily sell just because you're up. Because if the fundamentals have improved more than the price, actually the fundamentals going up while price is going down, the case just gets actually better, because there's a price value gap here that's more tangible now as well. And that's, I mean, one reason why this portfolio has done quite well, because the success story is that sure, they went up, but I didn't really sell out, after, happy with a 50 to 100% return, because, now I'm going to look for the next case. I mean, many of the stocks, many of the post-discovery stocks, they are even better buys after the discovery, after they're up 50 to 100%. They're typically lower risk and have more probable upside as well. So, and I showed you, I mean, if you just let this flourish, even if you suffered a 45% decline from the top here, you would still be up 200%. And a big position would only be down 45%, whereas the average junior from the top is down, from the 2-year top is down like 70%. So you're outperforming on the upside, and you're actually outperforming on the downside. And even at a sentiment low, you're still in the money. I mean, that is alpha to me. Preferably lose less than the average junior. And then when it turns around, you hopefully gain pretty much as some of these bomb juniors. But of course, right now you have the opportunity to actually get into some more beta trading sardines, etc., which can have this kind of return going into the next sentiment high. Again, I hope some of this makes sense. I hope I hope it makes sense, because again, it's like you can scoff at a return like 90% over 3 years, but it doesn't change the fact that those are very good results, handedly beating the sector by multiples. And yeah, I mean, this sector isn't that hard. It's just that we make it very hard because we have very low patience and we tend to sell out at lows instead of buying. So I have very high expectations for this portfolio in the next 3 years. Consider me biased. Assume I own shares of all companies I mentioned. Many are banner sponsors as well. Do your own due diligence. This is not investing advice. Thank you. Bye.